Ethereum is currently facing a significant downturn in its market value, with a sell-off that surpasses the $1 billion mark, signaling a momentous shift in investor sentiment and market dynamics. This dramatic sell-off has its origins in actions taken by Celsius, a prominent player in the crypto lending space, which executed a large-scale transfer of Ethereum. Reports indicate that Celsius moved an astonishing 459,561 ETH, which at the time of transfer was valued at approximately $1.014 billion across various cryptocurrency exchanges, sparking widespread speculation and concern within the Ethereum community and broader crypto market. The breakdown of this extensive sell-off reveals a strategic distribution across multiple platforms, with the bulk of Ethereum, specifically 297,454 ETH, valued at around $656.5 million, being sent to Coinbase Prime, a service tailored for institutional investors. An additional 146,507 ETH found its way to Paxos Treasury, further dispersing the significant amount of Ethereum into the market. Moreover, smaller yet notable quantities of Ethereum, each amounting to 7,800 ETH and collectively valued at $17.2 million, were directed towards Falcons and Coinbase, further contributing to the market's liquidity and the sell-off's impact. In the aftermath of this substantial movement of assets, Celsius is reported to still hold a considerable amount of Ethereum in its reserves, with 62,468 ETH remaining, which, at current market values, is estimated to be worth around $139 million. This remaining reserve indicates that while Celsius has liquidated a significant portion of its Ethereum holdings, it still maintains a noteworthy stake in the cryptocurrency. This event has not only affected Ethereum's immediate market standing, but also raised questions about the long-term implications for Ethereum's valuation and the strategies of major institutional players within the cryptocurrency ecosystem. The unprecedented scale of the sell-off initiated by Celsius has placed a significant burden on Ethereum's market dynamics, potentially altering the landscape of investor confidence and market valuation. Such a massive liquidation event introduces a considerable degree of volatility and uncertainty, raising critical questions about the resilience of Ethereum's market structure. Investors and traders are now faced with the daunting task of assessing the ability of Ethereum's liquidity pools and overall market capitalization to withstand this substantial shock without precipitating a wider market correction or bearish trend. From the perspective of technical analysis, the considerable volume of Ethereum offloaded by Celsius sends a clear bearish signal to the market, indicating a potential shift in market dynamics and investor sentiment. This substantial sell-off is poised to challenge Ethereum's established support levels, putting the asset's price stability to the test. A particularly critical threshold in this scenario is the $2,000 price mark, which stands as both a psychological barrier and a technical support level for Ethereum. The breach of this level could lead to accelerated sell-off activities, pushing the price towards the next major support level at $1,800. The $1,800 support level holds historical significance as a zone where buying activity has intensified in the past, suggesting that it could act as a formidable line of defense against further price depreciation. Should Ethereum's price approach this level, it may trigger a consolidation phase, attracting buying interest from investors looking to capitalize on lower prices, thereby potentially mitigating the impact of the initial sell-off. However, the ability of this level to hold firm in the face of continued selling pressure remains a pivotal factor that could determine the short to medium-term trajectory of Ethereum's market valuation. In the wake of the substantial sell-off, Ethereum's market landscape has undergone a notable shift, with resistance levels becoming increasingly pronounced and presenting a formidable barrier to any potential recovery efforts. The sell-off has effectively recalibrated the market's technical thresholds, turning previous zones of support into areas of resistance. A critical juncture in this new landscape is the $2,200 mark, which once served as a foundation of support for Ethereum's price. Now, as a resistance level, it poses a significant challenge to any upward momentum. Should Ethereum's price manage to ascend beyond this barrier, it would mark a pivotal moment, potentially setting the stage for Ethereum to target higher price echelons, with the $2,400 mark emerging as the next significant resistance level to test the asset's bullish resolve. The considerable market turbulence triggered by Celsius's extensive sell-off has undeniably complicated Ethereum's market standing, casting a shadow of uncertainty over its immediate price trajectory. Despite this, it's important to recognize that the underlying fundamentals of the Ethereum network, such as its technological infrastructure, developer community, and ecosystem projects, continue to exhibit strength and resilience. The disconnect between Ethereum's intrinsic value and its market price, as influenced by the sell-off, underscores the complexities of the cryptocurrency market, where external events can precipitate rapid shifts in valuation. The true test for Ethereum in the aftermath of this sell-off lies in its ability to demonstrate price stability and recovery potential, reflecting the robustness of its fundamentals amidst market volatility and shifting investor sentiment.